Hello guys, welcome back to a new episode. RALLYTOP Investing 3.2 SMC Masterclass here. The forex market is completely messy if you are a beginner trader. The terrain of the market is so confusing that if you do not understand how price moves on the chart or understand the language of the market, you will always be struggling to become consistently profitable in the market. But if you can understand what I'm about to show to you today, then you will become a profitable trader in the market so easily. I'm going to show you one single candle on your daily time frame that you can actually use to make a kill of the market on the lower time frame. Now, you can also find this candle pattern on the 4H time frame. But the only thing I want to advise you is that please do not go below the 4H to find this single candle pattern, because if you do, then you'll be recording lots of losses. Reason is simple: the higher time frame trumps every other time frame below it. So you need to understand whatever the higher time frame is doing, like the daily time frame, is what every other time frame below it will be doing. Okay, so if you go against the tide, then you should be ready to lose money in the market. That's why you need to pay attention to this video to the end. Now, before I show you this single candle pattern, you will need to understand how to read market structures correctly. Now, if you have no idea about how to map your structures correctly, we have multiple videos that you can look at before you come to this one. I'm going to leave the link to our playlists in the description box so you can check it out. Now, once you can identify the structures of the market, the next thing you need is this candle pattern on your daily time frame or the 4H time frame. Now, let me show you something first before we go any further. Look at this movement here. Price came from the high, printed this low, and then pulled back. Why is it a correct pullback? It's because the high of this candle took out this previous candle's high, the candle that produced this low. It took it out. After taking it out, it came down to break the low of this candle that it swept the liquidity of the high and printed this low here. And then price went up again. When it went up, look at what happened. It took out this previous structure high here. It took it out. How did it take it out? With a candle wick. This tells us a story in the market. This singular candle that swept the liquidity that was resting above this previous structure high. Remember, it's not a previous candle high. It is a previous structure high. Why did the smart money do this? Initially, price moved. The bulls moved from here initially to this high. They were in control. All of a sudden, the sellers jumped in and pushed price lower, even though the bulls managed to close bullish. But the fact remains that the sellers are stronger than the bulls. The sellers are stronger than the buyers in this instance. Once you find this kind of A pattern candle that has swept a previous structure high or previous structure low, then you know you have a very powerful candlestick pattern at hand. You need to look at it carefully, because that could be the code that you need to get to the lower time frame and make a kill of the market. This is the single candle I'm talking about. This single candle, some people call it shooting star, some call it inverted hammer. Whatever name you give to it, I want you to understand the psychology behind this candle. Understand it very well. Once you can find this single candle, you are not going to trade on this day. For example, this is 12th of May. I'm talking about this diagram here now. Now, you are not going to trade on the 12th of May because you need to wait for this candle to close. This is a daily candle. So you are going to trade the following day. So what do you do in the following day? You want to wait for price to come back, to tap into something to go short, because this is a clear signal to you as a trader that the sellers are in control. So meaning that the following day, there is going to be sellers moving price downward, and you want to capitalize on the sellers moving price downward to trade this one candlestick. It's a very powerful strategy, guy. Very, very powerful, if you can understand it. Now, how do you trade it? Because you want to trade the pullback before it goes further down. When price opens here the following day, it wants to go higher first before going lower. So how do you take advantage of this candle that will go higher first before coming down? That's what we want to do. In that instance, you want to take your Fib tool when you need to use your Fib tool, because a lot of traders don't know how to actually use the Fib tool correctly. Fib tool is a very powerful tool in the market that you can use to your advantage. So you need to pick the Fib tool and mark from this candle's high to low. Now, forget about this is a bullish candle, because in a bullish candle, you are supposed to mark from the low to the high. But I have just explained to you that the bears, the sellers, are in total control right now. The sellers are stronger than the buyers, because the first thing you need to ask yourself when you open your chart is that who is in control? In this candle, given this candle, the sellers are in control, guys. You need to pick your Fib tool to mark from the high of that candle to the low of that candle, and then you need to watch two levels on your Fib tool. All right, what are these levels? Number one, 50% Fib level, and the 61.8 Fib level. Sometimes I also look at the 38.2 Fib level, but my sweet spot is the 50% Fib level and the 61.8 Fib level particularly. Now, are you going to jump into the trade like that? No. I said in our last upload, you are not just going to jump into the trade. There are certain conferences that you need to see happen at these Fib levels. When you get to the lower time frame, like I said, you are going to wait for price to retrace into either the 50% Fib level or the 61.8 Fib level. Now, what are the conferences you will need to add? When price retraces either to the 50% Fib level or 61.8 Fib level on your lower time frame, you want to see a key level aligning with that Fib level. Like I said, like I explained in our last upload, I'm talking about a level like this. If price is going higher and then you find out that this is 61.8 Fib level, all right? Now, you want to see, is there any valid pullback around there that can signify a major key level? Like in this case, there is this key level here that aligns with our 61.8 Fib level. That's the first thing you need to do. Secondly, another conference that you need is that you want to see a candle rejection just at that area, at that level, just around that zone. You want to see a candle rejection. Once you find these three conferences, pull the trigger, because you have a high probability trade at hand. I hope you understand what I'm trying to explain to you. So I'm going to take you to the live chart and show you step by step on how to take this trade. Please stick with me to the very end. Okay, I want to show you the example right here for you to understand. I told you the first thing you need to do is to understand the structures of the market. Now, let's look at the structures of the market here so we can understand. As you can see, we are pretty much bullish. So price is breaking the highs and maintaining the lows. The last structure point is here. Look, price took liquidity here. After taking the liquidity, our high is confirmed. Now, your low, higher low, in the case of a bullish structure, cannot be confirmed just yet until price breaks and closes above this major structure high. And as you can see, that happened there. So our last lower high, our last higher low is here. If price takes out this higher low and closes below it, that means that we have chalk in our hands. Now, as price moved higher, it printed this high. For this high to be confirmed as a valid high, it needs inducement. And if you look at this carefully, where is your inducement here? Well, your inducement to confirm that high is simply right here. That's your inducement. And if you are marking this as your inducement and you're waiting, remember this is a daily candle. Are you going to be sitting on your hands and waiting until price comes to take out this inducement before you can take your trade? No, that's not a professional way of trading. You cannot be waiting, because from where price is to this point, this huge move is going to be a huge move. Are you going to sit on your hands and miss all that number of pips? No. So how are we going to take advantage of this market? Now, we are going to trade the internal structures. Anything on the right hand side is known as internal structures. What do I mean? Look, for you to trade the internal structures correctly, you need price to do something like this. You need to see price take out inducement. Once it takes out inducement, if it is with a candle wick, then you need to take advantage of it to take price lower. To where? To take out this inducement here. So this is going to be your ultimate target, but you can be taking your partials along the way, because this is huge move. So with that in mind, if you look at this structure of the market now, look at what happened here. From this high, price printed this low here. Okay, this is not a low, because some of you will now think that this is a valid pullback. This is not a valid pullback. Now this is your low here, and it pulled back to this high and then came back down to this low and went back higher. Look at the way it took out this high. This is what I told you initially. Look, price took out this high with a candle wick. Once that happens, then you know you have a high probability trade set up in your hand. So now let me show you what is happening here. Look at this. Price took out this high with a candle wick. As soon as you see this, this is a structure high. Remember, this candle, what's the date of this candle? This is 26th of May. So you are not going to trade on the 26th of May. You want to wait for this candle to close. You are going to trade on the 27th of May. So now you can use your Fib tool here if you so desire, or if you want, you can get to the lower time frame and use your Fib tool. So me, I'm going to go to the lower time frame to use the Fib tool. Remember, this is 26th of May. So let's get to the 15M. Okay, this is where price swept liquidity on the daily time frame. Now, when price opens, we want to use our Fib tool to know where price will retrace to, so we can enter the market going short. So from here, all the way down here, that's your Fib tool. Okay, and right here we have 38.2%, 50%, 61.8% Fib levels. Now, if you look at the 38.2 Fib level, do you have a structure point here? Yes, but this is like sideways movement. Can you take it that way? Well, I would not like to take something like this. I want a clear key level on the chart. So for me, I will not look at this 50% Fib level. Is there any clear key level? No. But 61.8 Fib level has a clear structures in the market. Look at this. This is your pullback here. I hope you understand. Now, apart from that pullback, let me show you some other thing again. The conferences you have here. If you pick this low, this is your what? Okay, look at that. It aligns with that 61.8 Fib level. Now, apart from that, look at this fair value gap. It aligns properly. Everything aligns. Can you see that fair value gap? It aligns with that 61.8%. So everything aligns around this 61.8%. This is where I'm going to take my trade. I'm not looking to take anything here. If it doesn't come to my level, I sit on my hands. It's as simple as that. I sit on my hands. I won't take any trade. So let's continue to advance price. Now, look at it. Price has come rejected here. Look at these two candles. This is a rejection. It's a rejection. How do you take this trade? How you take this trade is that from here, this is where, when this candle closed, you want to take it from here, your stop loss just above this fair value gap. All right? And that's how you want to take your trade. I'm not going to go anywhere above that. Just give a buffer, because price can do anything. So let's continue to advance price and see what happens. So price is trying to go down, but we don't know whether it's going to go our way. We have already entered the market here, going short. We want to go short. Our stop loss just above here. Just above here. That's our stop loss. And our TP will be below this low here. Simple. But I will advise you to take 1 to 2. 1 to 2 for this. So 1 to 2 will be around this level. After 1 to 2, then you can begin to trail your stops. Okay, so this low will become your 1 to 2. Simple. So let's continue to advance price and see what happens. As you can see, boom, price has hit our TP. Can you see that? Easily. So after taking out this level, if it closes below this level, then you can continue to trail your stops and take it to where? To this point, guys. Very simple thing. Take it to this level. And that will give you how many? That's going to give you 2.98, almost 3R, which is a great trade. So let's see whether it gets there. Boom. Smash our take profit. 3R. Confirmed. And if you want to continue to trail your stop, we can. Now, let me use the Fib tool, to take price out from here. Okay. So let's continue to advance price little by little and see another opportunity we could have had in the market. Okay, so now look at this. We are done with this. We have secured 3R here. But look at this. I want to show you something again that you can take advantage of. Look at this high here. Remember, price pulled back into this before dropping to form this low. Pick your Fib tool again. You don't need to go to the higher time frame anymore now. All right? You don't need to go to the higher time frame. We are still trading on the 27th. Okay? Before then, let me get back to the daily time frame, and let's see something here. There is something I want to show you here. Please follow me step by step. Now remember, our TP, our ultimate TP will be here, this low here. That's going to be our ultimate TP. Whatever we are doing, that is if you have the mind to hold your trade until it gets to this level, that's going to be your ultimate TP in the market. That's what I wanted to show us. So we go back to that 15M. So this is our 15M again. Let's take out this Fib tool so that it doesn't confuse us. Now price has printed this high again. So we want to see what is happening in the market using our Fib tool from this high all the way down to this low. We want to look at 61.8% because why? There is a pullback here. Look at this. It aligns with the 61.8%. Look at, that's a valid pullback. It aligns. Okay? We want to look for trade there. The 50% did not align. All right? The 38.2% did not align. So this is where we are looking for to take this trade. If it doesn't come to us, no problems. So let's continue to advance price. Boom. Got to our 61.8. We have gone too far. Let me take this out from here. Okay, that's 61.8. It aligns properly. Okay, and then look at the candle rejection here. Clear candle rejection. Once you find this, what do you do? What you do, there are two ways you can enter the market here. You can enter the market after this candle had closed, but if you do that, your stop loss must be above, and that's one way to enter the market. So if we enter the market there, let's see, let's continue to play price. Okay, so sorry, let's frame the trade. So we wanna sell our stop loss above here, just like so, and our TP. Okay, so 1 to 2 roughly, 1 to 2 roughly. So let's continue to advance price and see. Already price is almost there. Can you see that? Boom, hit our 1 to 2. After it closed below this 1 to 2, this 1 to 2, you can trail your stops. It's as simple as that, guys. This thing is not difficult. We make it difficult. All right? Traders, we traders make the market difficult. It's not difficult. So that is the way for you to use the one daily candlestick to make a kill of the market. If you find this video useful, please, if you haven't subscribed to our channel, please do so just immediately and become part of the family, and turn on the notification so that anytime we publish a new video like this, you'll be notified about it. And if you haven't joined our free Telegram channel, please do so just immediately. And if you want to join our VIP community to learn more, the doors are open. Okay, the doors are open, so you can check on us, and I'm going to leave the link to our VIP community, how you can get enrolled. You'll find it in the description box. All right, guys, thanks for listening. I see you in our next educational video.